morning. At KBC, we recorded a net profit of €557 million in the first quarter of 2026. Compared to the previous quarter, our total income benefited from strong net interest income and higher insurance revenues. Net fee and commission income increased slightly despite the geopolitical turmoil. Also, the net other income increased. At the same time, trading and fair value income, as well as dividend income, were down. Our loan portfolio continued to expand. It grew organically by 2% quarter-on-quarter and by 7% year-on-year. Customer deposits, excluding volatile low-margin short-term deposits at KBC's bank foreign branches, were stable quarter-on-quarter and up 3% year-on-year. As usual, the first quarter included the bulk of bank and insurance taxes for the entire year. Operating expenses, excluding those bank and insurance taxes, were slightly lower than in the previous quarter. This was partly due to seasonal effects. Insurance service expenses after reinsurance were slightly up. Loan loss impairment charges for our lending book were slightly up compared to the previous quarter. In addition, due to the geopolitical turmoil, we added a management overlay reserve to the ECL buffer for geopolitical and macroeconomic uncertainties. The increase amounted to €75 million, bringing the total ECL buffer and management overlay to €175 million. Over the past few months, we have also made considerable progress in implementing our strategy. We finalized the acquisitions of 365 Bank in Slovakia and Business Lease in Czech Republic and Slovakia. These acquisitions contributed €13 million profit in the first quarter of 2026. They had an impact of minus 0.5 percentage points on our capital position. This brought our unfloored, fully loaded Common Equity Tier 1 ratio under Basel IV to 14.4% at the end of March 2026, which remains a very strong level. Our liquidity position also remained very solid. This is illustrated by an LCR ratio of 159% and an NSFR ratio of 135%. As approved by the General Meeting of Shareholders on 7th of May 2026, we will pay a final dividend of €4.1 per share on 20th of May 2026. This brings the total dividend for the full year 2025 to €5.1 per share, which corresponds to a payout ratio of 60% of the 2025 net profit. We aim to lead the way in digital innovation. In this context, we are delighted that Kate, our AI-powered personal digital assistant, has now reached 6.1 million customers. This is 11% higher than a year earlier, and more than 70% of customer queries in our core markets are now solved autonomously by Kate. Our ecosphere, My Mobility, launched in November last year, has already attracted over 103,000 clients. At the same time, 37,000 clients have signed up for the recently launched My Home ecosphere. Responding to the growing demand for secure crypto investment solutions, we made it possible for private investors to purchase and sell crypto assets on KBC's online investment platform, Bolero. This is done in a secure and regulated environment, and it's the first in Belgium. More recently, KBC Asset Management entered Europe's rapidly growing exchange-traded fund market. We launched a unique Czech koruna hedged ETF for our Czech investors. This milestone supports KBC's broader strategy to provide investment solutions that are innovative, convenient, valuable, and reliable. Our goal remains to be the reference bancassurance across all our core markets. We work towards this ambition through a customer-centric approach and a firm commitment to digital innovation. Above all, we rely on the confidence our customers, employees, shareholders, and other stakeholders place in us. That trust is deeply valued, and it is something I am sincerely grateful for.